Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending June 12, 2026. The title is Staying the Course, so this is a focus on the Bank of Canada and also what the Fed is about to announce, and USMCA this week. We'll talk about that, so everything that has to do with the long-term trend in the market. But also June 12th is SpaceX Day, so we won't really touch it directly in this review, but we've covered it extensively in media appearances this week. So what we recommend is that you go here on our new webpage, the macro playlist, mcmahon.ia.ca/en, or on social media. You can find a link to some interviews. Like for example, I discussed it on BNN this week, so you can find the information there. But history suggests that if you were lucky enough to own some of those stocks before IPOs, even for very large companies, then you would have made a lot of money on IPO day. But if you buy shares during the day or at the end of the first day of trading, well, you're exposed to some sizable drawdowns over the next 6 months. Names like Airbnb, Facebook, Palantir, for example, they on average had a drawdown of about 60% in the 12 months following the IPO. That doesn't mean that it was a bad investment in the long run. Like for example, Palantir is up by a factor of 20 over the last 3 years. But IPOs can be volatile, and purchasing on the first day, usually it's not the best idea. The best idea is to wait for markets to calm, for things to consolidate, and then at some point you have a stronger base. So it's pretty much like the view that we have, but more details in interviews that you can find on the webpage. At the bottom of the webpage, you have a section in the media. It's all there. So now looking at this week's markets at the close on Thursday, positive for bonds, mostly for stocks. In North America, it was positive. We're seeing green on the screen this morning before markets open, so we should continue that trend. Emerging markets had such a stellar start to the year that when you have some profit taking, of course, it's more concentrated there. So a tougher week, but still 22% year to date. Price of oil is down. We're at $87. Of course, we've seen this movie before, but it looks like they're getting close to a real deal, or at least a memorandum of understanding, so MOU. So just to outline some form of a deal that could be signed next week at a G7 event in Europe. But of course, we've seen this movie before. Again, could be very unpredictable, but we're hearing good things, so markets are getting more, optimistic about this idea. But let's see, let's still be cautious. But the price of oil is reacting accordingly, and gold is now in a bear market, so more than 20% drawdown since the latest peak. So the darling at the start of the year now is negative year to date. All right, so 3 topics. Let's start with the Bank of Canada. It's steady as she goes. Really no surprise on this latest decision. This is the 5th consecutive decision where rates were held at 2.25, and 2.25 is the bottom of the neutral range, which is between 2.25 and 3.25, with the median being 2.75. So the Bank of Canada is parked in the right spot. They have some optionality to cut rates if needed, to hike without really holding back the economy as well. So they're in a good spot. And Mr. McClem was saying that the economy is weak, but not clearly in a recession. And, we opined on this in the last few weeks. We completely agree with this reading. A recession is something that is more drastic than what we're seeing now. Just quote the chart of the week that you can find on the macro playlist webpage. The drawdown on GDP over the last 2 quarters is 0.3%. So a very small dip of 0.3%. And in a typical recession, of course, if you take away COVID, because that was a global pandemic, but usually when you have a recession, it's a drawdown of about 4% that you see at the worst. So not a recession, weak, but not a recession. What we do expect for the rest of the year is that they will stay put. The market is still expecting 1 hike. We think that it's fair to price some odds of a hike, but we do think that they will be holding through the year, and the next move should be a hike, but more in 2027 than in 2026. Now turning to the Federal Reserve in the U.S., inflation keeps on rising as Chair Warsh makes his debut. He will be making his debut next week. The first decision of Warsh's tenure as at the Fed is on June 17, so next Wednesday, and he will take the podium at 2:30 p.m. Eastern Time next Wednesday. So on the left, you have inflation. This week we had PPI, which accelerated to 6.4%, but we also have CPI, which is of course more important to the Fed here. 4.2%. Core is accelerating at 2.8, and what they call super core. So really like the core of the core of the cores. So you take away energy, you take away food, but then you take away everything that is very volatile around that, and you get the super core. And we're at 3.6%. So inflationary pressures are alive and well in the U.S. The economy is overheating, and of course the tariff effect, the AI build-out effect, and the oil shock effect are all combining here to make Chair Warsh's job difficult, because how are you going to cut rates in this environment? And now markets are pricing in. You see on the right, one hike, or at least 0.8 hikes. So let's round it up to one hike by the end of the year. So it's not going to be this week. Markets are not discounting that as well, but at some point they will have to hike if things continue in this direction, and they will have to package it ahead of time. So let's see how President Trump reacts to that as well. So it's going to be quite interesting next Wednesday when we have the next Fed decision. Now, to wrap it up for North America, USMCA or CUSMA, Trump this week said that he's not looking to renew CUSMA when it comes up for a review on July 1st. So it's very important here to understand that not renewing does not mean withdrawing from the agreement. So if Trump said that he would withdraw from the agreement, Canada can do that, Mexico can do that, the US can do that. You just give a 6 months heads up that you're going to be withdrawing from that, then everything falls apart and you don't have free trade in North America anymore. So that would be a catastrophic scenario. But for Trump to do that, he would have to work with Congress. And what we've learned over the last few years is that Donald Trump does not want to work with Congress. He prefers to rule through executive orders. So if he would have withdrawn from CUSMA, likely it would already been done anyway. Now, not renewing is a scenario that we've had all along, is that just July 1st passes, and then what you have is that for the next 10 years, you have annual reviews of the agreement, rather than just signing before July 1st to renew for the next 16 years without any adjustments. So pretty much the status quo. It doesn't really boost business confidence initially, but at some point we expect that business confidence will rise, because businesses will get used to living with this kind of uncertainty. But again, the chart on the right, which we've used over the past 12 to 18 months, is to show that the trade balance is the trade relationship is very balanced between Canada and the US, Canada and the European, the Euro area, and also with Mexico. But focusing on Canada, exports relative to imports is pretty much the same. So we're building things together. It's not as unbalanced as President Trump would have it be when he's discussing that. So the U.S. needs the agreement, Mexico needs the agreement, Canada needs the agreement. So I think it's going to be something that will stay in place, but expect some uncertainty and some volatility around that for the next years. So that's it for CUSMA. And what we'll be watching next week in Canada, we'll have the CFIB Business Barometer Index, so an interesting index on business confidence in the country. That's pretty much the most important economic variable to follow for the next year or years. And retail sales in the US, FOMC rate decision. We'll have the first decision by Chair Warsh next week. Again, of course, he sold something to President Trump to get the job that likely would be able to cut rates, but inflation is going to make his job quite difficult, so that's going to be interesting. Retail sales and industrial production will be out as well, so very interesting week ahead. So again, macro playlist, this is your one-stop destination for macro and market news, mcmahon.ia.ca/en. You can follow us on social media as well. So, bookmark that, subscribe to the newsletter. You won't miss anything. Always happy to serve you. It's going to be an interesting week next week, and I'll see you next Friday.